Hello, Accounting 560 students. I want to take a few minutes and teach you life skills. These are survival skills. These are skills that I was never taught as a young professional, which I regretted quite a bit. So, what am I talking about? It's how to take the theory that we learn in class and apply it to the real world. Let me give you an example. If I were to ask you what the tax rules are for when you can deduct bad debts, you'd all tell me, well, you can deduct bad debts when you actually write off the bad debt. Okay, that's lovely. That's nice. But in the real world, no one just hands you a piece of paper that says, here is the amount of the write-offs that we had last year, deduct this amount. And in fact, if you're like me, the very first couple of weeks I was working as an intern, I actually jotted that down as something I needed to know on a client. And I wanted to ask them on what we call as a PBC, or prepared by client. It's a request list you give your clients to say, look, I've got your financial statements, but I need more detail. What's in this accrual account? How many months did it take you to pay this? Things that you can't possibly know by looking just at audited work papers. So I asked, hey, I was going to ask, I jotted it down, I need to know what the write-offs are. Can you tell me what bad debt write-off you had last year? Thankfully, I had a senior that had common sense that stopped that from going out, because the client would have just been perplexed. I mean, while it's possible for them to put that number together, they don't think in those terms. Rather, they just go throughout the year and they, you know, at the quarter breaks, they adjust their allowance as the case may be. They increase the allowance, and then they write off as they need to write off. And every quarter, they're making that number be right, and they don't worry about it. And in truth, if I said I want a listing of all the bad debts you wrote off, it could be pages and pages and pages of notes, and you still wouldn't have any comfort level you got it right, other than, well, this is what the client told me. Look, the way accounting works, it's so beautiful. It's poetic. Okay, double-sided entry really, really is amazing. If you don't appreciate it now, I think as you grow in your professional careers, you will. So let's use bad debt as an example and specifically teach you how to grab your own Schedule M's out of the financial statements without having to trouble the client. It's not necessary. Okay, so let's look here. Again, what's the rule of bad debts? Bad debts, you can write them off for tax when you actually have a write-off. What does that mean? Well, before we get to that, let's start with GAAP. What does GAAP do? Well, GAAP goes through and they say, well, based on our historical numbers, whether it's a percent of our AR or it's aging or something, they come up with a number that's a reserve amount for bad debts. And the journal entry that they use to record that is to debit bad debt expense, credit the allowance for bad debts. That's how they set it up. So if you think about what the P&L would look like, in my example here, let's just say this is the very first year. The allowance for bad debt at the beginning of the year, which would have been the end of last year, so the end of their first year of operations, would have been 15,000. So the journal entry to get that there for GAAP would have been to debit bad debt expense, credit allowance for bad debts. Now, if I'm asking you to give me the tax return for year zero here, you just say, well, I can't deduct any of that 15. It was all accrued. So you would get a Schedule M that was temporary, unfavorable because it's going to increase our taxable income of 15,000, and you would record that on your M1 or M3 and make your adjustment on your work papers, and you go forward, and that would be fine. The real question, though, is next year when we're operating, we want to know how much of that 15 or anything else we may have written off. So how does that work? Like, I mean, again, you can be like me and ask the client, say, give me that number, but they're not going to be able to provide it so easily, and they don't need to. That's the thing. So let's look here for a moment. Let's say year one, example one, we don't know what the write-off is. We don't know. But we do know that the beginning of the year allowance was 15 and the end of year 8 was 18. And we also know that the bad debt expense was 60. So let's use our GAAP knowledge. How did that $60,000 entry happen? Well, they looked throughout the year and they made entries as they went through. Receivables got collected, some got written off, some were outstanding for so many days, whatever. They came up with numbers each quarter and they came up with an allowance. Well, that allowance would have been debit bad debt expense, credit the allowance. So this is my reconciliation of the allowance. So I don't know what my write-offs were, but I know what my current year accruals were, right? They were $60,000. Oops, one more. Okay, because that's how I got my bad debt expense that I can see in my GAAP financials. So here's the first key point. When you're looking to find this number, please don't go to the income statement and look at bad debt expense. It's a waste of time because that is not going to give you your tax number. All that's going to tell you is how much you've put into your allowance that year for GAAP purposes. It won't tell you the write-off number, and it's a fool's errand. Okay, so the end of the year is 18. So if I know the end of the year is 18,000, the only other entry that happens to the allowance is when I actually do a charge off. When I charge off, the entry is to credit the AR, to actually get rid of it, throw it in the trash. But I debit the allowance. So with that in mind, I can simply back into, right? I could back into what my write-offs had to be. And I think in this case, let's try, I think it's 57. Yeah, it's 57. So if you just think about GAAP, you can figure out on your own really quickly, hey, it had to be 57,000 because I know the other entries that would have gone in there. It has to be 57,000 and I left with 18. And so my write-off would have been 57. So what would be the amount then of my permissible tax deduction? It would be 57,000. Okay, now here's where the magic comes in, folks. You know that the write-off is 57, but you also know that your GAAP entry is 60. So you have to make a Schedule M from the 60 to get down to 57. Now, this is an expense, which means you're reducing your expenses. So when you reduce your expense, you're increasing your taxable income, which means that it's an unfavorable Schedule M. Well, what's the unfavorable Schedule M? Well, it's going to be unfavorable of $3,000, right? That's going to be my entry. Okay, so far so good. But can I show you a shortcut that will just totally blow your minds, that just makes this so much easier, which is what that senior, that particular morning showed me in the office? I don't have to do all this, right? All I have to do is take the change in my reserve. I don't need to go through all this machination. I just need to take the change in reserve. If you have a liability or a contra asset, because all a contra asset is a liability that's just been reclassed to the balance sheet. Okay, so allowance for bad debt is really a liability kind of entry. We just show it on the asset side, but it's got a credit balance. That's the natural balance. If that number goes up year over year, that's simply an unfavorable Schedule M for the difference, and you're done. So a seasoned professional, for instance, would look at this and say it's a 3,000 unfavorable, boom, done move. They wouldn't do any of this. They don't need to. They just trust the accounting. They trust the GAAP. Okay, so in this case, you can see it's a 3,000 unfavorable. All right, well, let's do another example, example 2, and let's just see, and I'll put this up here just so we have a nice, complete Zenistic thing. But let's go to example 2 and see how that works. Example 2, write-off amounts. Okay, again, same thing. We don't know for sure what we actually wrote off here, right? We're hoping to find out. But let's use the shortcut method, and then we'll test this and see if we're right. So we have an allowance for bad debt. It's a contra asset, which means that if the balance goes up, it's unfavorable. If it goes down, it's a favorable adjustment. Well, this has gone down from 15 to 10. So that's a 5,000 favorable adjustment, which means that we would increase our GAAP expense number to get to a tax amount that we can deduct. So our Schedule M would be 5,000 favorable. So that would mean that instead of getting a $45,000 deduction, right, we should end up with what, 50? We should be 5,000 higher. And again, a seasoned professional would say, I'm done, sign off on it. The senior would sign off on it. We'd move on. But for our purposes, introductory wise, let's go ahead and prove that out. Are we right? Why does that make sense? Well, you know the beginning balance is 15. The end of the year balance is 10. Now, this is formula driven, so I'm not going to mess with it now. What were our current year accruals? Our current year accruals were 45,000 because that's the only way that number gets into the account. And so then if we know our ending balance has to be 60,000, that tells us our charge-offs had to be 50. And that would give us a favorable adjustment of $5,000. And we've proven out why that makes sense. Okay, so if you got that down, now let's go to the next one. Okay, that's how they all work. And so you say, I've got this. Yay. Okay, well, time out. There's one other wrinkle that I want you to think about that we need to think through a little bit. And that is not every reserve balance on the GAAP financial statement is a true balance for tax purposes. And what do I mean? Well, think about PTO. PTO is paid time off. Many of you, if you don't know what that is, you will. It's bliss. It's where the company says you can just leave 15 days out of the year, not show up. I don't care if you're sick. I don't care if you're bereaving. I don't care if you just want to be in Disney World. Whatever you want to do, peace out. It's on you. Okay, so this is like vacation type. We call it PTO because we used to have sick leave and vacation, and companies recognized quickly they didn't want to debate with somebody how sick they were or not sick. They just don't care now. If you want to be sick, if you want to go on vacation, either way. If you're healthy and you take more vacation, fine. So this account is an accrual. At the end of the year, based on the policy of the company, you come up with how much money in dollar terms you owe employee A, B, C because of PTO. It says they've accrued $4,000 worth of benefits. They can be gone, and I owe them $4,000 of wages. Okay, so let's look here. At the beginning of the year, the accrual was 15, and the end of the year it was 22,000. Change the number slightly from the other one to just keep it straight. The thing about this that makes it difficult, though, is we have to think about, well, first of all, time out. What do we do for GAAP? Well, for GAAP, at the end of the year, we just say debit PTO expense, credit this reserve. Tax says what? When can we deduct that? Can we deduct it when we simply accrue it? No. We can deduct it when we pay whatever we pay within 2.5 months after year end, presuming that the person it's owed to isn't related. If this is an owner, then 267 might apply. We might have a related party where we're accrual and they're cash. We have to delay it till they pick it up. But in this example, none of the PTO is to an owner, okay, making it simple. So with that in mind, let's look. Let's say, so what you have to do at the end of the year is you have to ask your client on a PBC request, hey, on this PTO account 2,560, whatever the account number is, how much of that was paid within 2.5 months? Because you can't possibly know sitting in an office what that was. So they tell you in this case, $6,000 of the amount at 12/31x0, which would be, the amount that carries over to 11x1. 6,015 was actually paid. Okay, was actually paid. So that means what? That means you can deduct 6, but you can't deduct 9, right? Can't deduct 9. So let's put in here $6,000 and think about this for a second. We're saying that we can deduct $6,000, 9,000 is non-deductible. So what's the nature of the Schedule M? Well, just like last time, this is a liability. We started with 0 because it's the first year. We ended with 15. We went up to 15. Now, normally you'd say the Schedule M should be unfavorable 15,000, 0 to 15, the change. But the thing is the whole 15 isn't bad. Only 9 of it's bad. So really the Schedule M should only be $9,000, right? It should just be that portion reverse out what you can't deduct. So here's the point. On these type of economic performance issues that depending on what happens after year end, you have to adjust the GAAP reserve balance here to a tax number, like a tax basis balance sheet. We have to think about what the tax basis would be in it, what the number should be. So for our purposes, it should really only be 9,000. 9,000 of that reserve is bad, but the other 6 is good. So for that year 0, I would have made a Schedule M entry unfavorable of $9,000. That's what I would have done, even though the GAAP balance is 15. Okay, so now let's fast forward it to the end of this year. At the end of this year, the balance is 22. Now, again, if there were no tax accelerations in here, we would just take the change between 15 and 22 of 7,000 and say, well, that's went up. It's a liability, so therefore, it's going to be an unfavorable adjustment of 7,000. And by the way, this logic holds true even with the asset side. It's just in reverse. So let's say we have prepaid expenses. GAAP debits those, creates an asset. Tax allows us to expense those as long as we don't violate the 12-month rule, right? So if we're looking at the change over there, it's the same logic, except it's in reverse. If the balance of the prepaid goes up, and they're qualified 12 months, we can take more for tax than they took for GAAP. If it goes down, we have a reversal and it's unfavorable. So it's just the opposite. Okay, let's get back to this particular example. So um, at the end of the year, the $7,000 number is not going to give us what we really want to know, right? It's going to be wrong. It's going to be wrong. And why? Because we deducted 6. So we started with 9. 9 was really what we couldn't deduct. Now, at the end of this year, we asked them, and they said we paid 8,000 of what was in there at the end of X1. So really, that means $14,000 was bad. $14,000 was bad. Not that, not the 22, because we can deduct 8. So really what we're trying to take is the change between the adjusted tax number, this tax basis number, between 9,000 and 14 is 5,000. That's the number it went up. And because it went up, it's unfavorable $5,000 difference. That's what we should be recording. Okay, so now let's look and see if this makes sense. Can we reconcile what's happened? How much should we, through the end of this second year, the end of X1, how much should we have deducted in total? Well, we should have deducted the whole 15. We deducted $6,000 in X0, but then the rest of it was presumably paid off or written off. Okay, it was paid or written off. So 15,000 should be deducted, plus the 8 now that on this accrual would have been deducted. That would be $23,000. How much has gone through total for GAAP books? Total for GAAP books would have been 37,000. Okay, so if you take 37,000 total, 15 plus the 22, plus you take or you subtract from it the 23 that's actually gone through, that leaves you with $14,000 that has yet to be deducted. So does that make sense? Well, yeah, you can see that 14,000 right here. We haven't deducted 14,000 in total because that's essentially what, by making your adjustments, we've deducted everything but $14,000. So that tells us that the method is working, that we're consistent. So the takeaway here is on all of these Schedule M's, as you calculate them from GAAP financials, you just take the change in the balance, and this works for UNICAP, it works for prepaid expenses. You just have to get the signs going the right direction, favorable, unfavorable. And if you think about what's going on, it will make more sense. You can do a little cheat sheet. But if you have an item that we have to adjust the GAAP number for tax, because there is some tax basis in it, you did get some tax deduction, then you have to make these adjustments like we're doing here. So let's look over here and just say we want to do one more variation. And let's say that at the end of X0, we have the same negative $6,000, okay? Because it's the same 9, but the difference here is that we paid $20,000 of the 22. So our difference here should be a favorable adjustment of $7,000, and we're done. So all you would have to do to calculate it is this little spot right here. But let's talk about what's going on. Okay, what's going on is you've deducted 15,000 plus you deducted 20,000, 35,000 in total by the end of X1, and your total accrual was 37,000. So $2,000 is still residual remaining, and you would adjust to 7. So again, if your book expense is 22, you take a $7,000 tax adjustment. Favorable means you're going to increase your expenses, and now cumulatively you reported $38,000 of expenses that have gone through on this item. Okay, so as I look at this a little bit closer, I've got an error in my formula. I'm taking the adjustment, tax adjusted, I think. I want to be there. And I want to be here. Sorry about that delay. Okay, so this is right. The tax deduction I'm taking in the first year is 6,000, it's not 9. So when I add 6 plus 29, that's 35,000, which makes sense because my reserve now is 2, which the difference is the 1522 is equal 37. That's what I've taken for GAAP totals, 37,000.
but if I should have only taken 35,000 for tax, 15 all from that first year that either got paid in the first part of this year or through the rest of it, so 15,000 total, plus 20,000 of this year's ending accrual, which got paid in the first 2.5 months. So that means 6 plus 29 is 35, 35,000 less 37. And I've also corrected this now. That should only be 23,000 cumulatively, which would be the 15,000 plus the 8. Well, hopefully this is helpful to you. Again, this is a key to understanding how to calculate um, your Schedule M's with just financial statement information. Supplemented with the 2.5 month stuff that you don't know. But this is how we find out our Schedule M's, and we figure out if they're favorable or unfavorable. If you have any questions about this, please let me know. This is an important part of this unit, one that is very testable, let's say, and one that's a life skill for a tax account. So let me know how it goes.